And a quick reminder, none of this is financial advice. This is just what I am doing with my money inside of ULTY. Welcome back, dividend stackers. I didn't post last week, not because anything broke, but because real life hit and the market did what it does. Last time we were up, this week the market took a lot of that back. And today I want to show you exactly what happened, where I stand right now, and why this is still part of the plan. So here we are, here is the portfolio. Now there is a slight change I have to make because I did have the new portfolio ready to go. I will share that here in a minute, but I'm building the tracker to make sure I have everything there. As I said, the YOLTY-YOLO experiment still runs and that'll be separate, but it's together in the same account. So I got to figure out a way to separate that when I'm sharing it with you guys. However, this is where YOLTY stands. The market closed at $35.99. My share cost basis now sits at $52.54, and my break-even price sits at $41.39. I now hold 317 shares. My market value sits at $11,408.83. My total cash invested, which includes out-of-pocket and dividend, sits at $16,654.78. And my actual out-of-pocket invested sits at $13,122.19. My dividends received now sit at $3,532.59. And we close out the month here with $765.63. Now that is a little bit of cheating only because January did have 5 paydays, but it looks like we're hovering right around the $600 a mark with what ULTY has retained. This week, as you can see, ULTY paid 51 cents, just shy of 52 cents, for a distribution rate of 70.83%, and all that was ROC. And the unrealized gain here now sits at a negative $5,245.95, which is a negative 31.5%. But with my true gains, which includes the dividends, my true gain stands at a negative $1,713.36, which is a negative 13.6%. Now we had made some progress, and last week I actually almost fell under negative 10%, that was pretty good to see. However, everything sold off on Friday, really Thursday and Friday, and we gave all of that back plus some. When we look at the taxes here, I'm accounting to have received $702.26 after I calculate the after-tax dividends, which I'm estimating that to be $63.36 based on what Yomax has announced on the weekly distributions. And taking you guys over to the actual dividends, you can see there, pretty consistent with the dividends the last 3 weeks, really, just over 50 cents. Which for me was right around $160. This week was $159.17 for my shares on record of 317 shares there. And there's one thing that is going on here with ULTY is that since the split, they have basically been around the 50-cent dividend paid there. And we'll see how that continues throughout the year. For my transactions there, I did buy on 129 4 shares at a price of $37.42. And that just sucks right there because then the market dipped and I could have got that a lot cheaper, but it is what it is there. That's part of the process. I am not dripping anymore. Like I stated in a couple of videos before, the drip now goes into the margin. With the new portfolio, that's going to play a key part. As stated, $600 a month will be paying down the margin, but I will continue to buy ULTY every other week. So in a sense, if you want to think of it like this, I'm technically dripping half of what I make throughout the month. Although I will not be calculating it that way, I'll be calculating it as a buy, and I'll share that with my portfolio. Coming over to the margin use, that has now changed. So I have not updated that yet. I will be doing so as soon as I get this new tracker going. Like I stated, I have a lot going on, just life in general that happens, and you just have to take that first. So I'm trying to put that together, trying to make sure I have it there for you guys to be able to see. This whole project is to be transparent, and the new portfolio will be the same thing there as well. So let me jump to that now. All right, so here is the quick reset. I want to walk through what I'm holding right now and how I'm thinking about this portfolio. this is a high level overview. In upcoming videos, I'll break down why I chose specific stocks and ETFs and why certain positions like ULTY deserve their own deeper discussion, which I will continue to share on the ULTY YOLO experiment. What you're seeing here is what I call my earned capital strategy. And as I scroll down here, the idea is simple. Every paycheck is treated as deployable capital. I invested into a portfolio designed to generate income, compound over time, and eventually help support real life expenses, using margin carefully as a bridge and not a gamble. And not in any specific format here, because I'm not sure exactly how to update these to put them in order, but I will. It's my income core. I'm holding, as always, ULTY, but I have now added YMAC, Maggie, Devo, SPY, Nihi, and T-SPY for cash flow. These positions are here to generate income and help stabilize the system over time. I'll explain why I kept ULTY specifically and how it fits into the strategy in a separate video, because it plays a very particular role. Next is the stability and liquidity. SGUP acts as my cash-like position. It reduces volatility, provides flexibility, and supports margin without forcing me to sell into the market weakness, especially on a week like this last week that just went by. And then there's long-term growth. I own individual stocks like Nvidia, AMD, Tesla, Amazon, Google, and APLD for exposure to AI, compute, and digital infrastructure. And then on top of that, I use thematic ETFs like IYW, SMH, QTUM, RQ, URA, and nukes to broaden exposure across technology, semiconductors, robotics, quantum computer, and energy. This week, the market pulled back, and that's part of the process. The goal of the earned capital strategy isn't to avoid red weeks. It's to build a portfolio that can handle them, keep generating income, and keep compounding while life continues. This is real money, a real system, and I'll keep breaking it down step by step, the good weeks and the bad weeks, just like I did with ULTY here in the coming weeks and hopefully years. I'll put my whole methodology together and share with you guys in different videos. Of course, life does happen here, and to be honest, I'm trying to find time to make these videos to share with you. As I scroll up here, you can see here, I do have a couple options, and I'll go through them here real quick. I just have a Big Bear AI debit spread. I bought two of those, the $4.50 to the $10 call. It's currently sitting at a negative 23.23%. It was actually up on Friday, but this is a long dated debit spread all the way to January 15, 2027. I also hold Nine, and what Nine is Nine Energy Service. It's an oil field service company, not an oil producer. Basically, they provide completion tools and equipment used in shale drilling. Basically, when oil companies drill more wells, Nine gets more business. That's why Nine tends to move as a leverage play on oil activity. And the reason for the debit spread really is I make money if Nine rises, but I limit the risk, so it wasn't as expensive. Nine really is a penny stock, and I can share that more with you guys in later videos. Next, I have CVS up there, and that one hurt a lot. I actually bought one debit spread there for the 83.86 call, and shortly after, Trump came out and made some type of tweet and it just dropped CVS, so I might have to take that as a loss, but I do have it dated for 220, so I have a little bit of time there to see if that recovers, but that might be a loss there. And of course, the main one that I have here is the SPY 660 620 debit spread put. I mentioned that in my last video, what I was going to be doing there, just in case with everything that was going on in the world. I put that on there. Cost me a little bit more than I wanted to, and I can share here what that is. I'm actually down $164, and in order for me to actually break even there, I would have to be at $654.10 on SPY. However, we saw how violent the market moved the last couple of weeks here, to a point where at one point this put was actually positive by almost $120. But of course, this is insurance for my ULTY right now. I will try to reconsider it, especially as I added more plays or a bigger portfolio there of how I'm going to plan to do that. But basically where this starts paying off is really where when it dips below 654, which can happen. We saw it happen during the tariffs. We saw it happen during COVID. We saw it happen multiple times. And really what it is just an insurance to pay for that. It's dated for 3/31, so it has time on there. And it's basically like me just paying an insurance on my car just in case I crash. I'll have some to make back, and we'll see how that goes. I can share more of that later in some other videos on how I plan to put that. But the spread basically makes it a lot cheaper for me to do. And if you want to learn more about that, just definitely do your research on that to see how that works. All right, so comment below, what do you think of the new portfolio? How would you want that shared? I'm here to share everything with you guys. I will continue to drop ULTY videos more than likely on a weekly basis, and I'll add the portfolio update or the new portfolio update on there throughout the weeks to come here. This is going to be called the earned capital strategy, and I will share that more and more and more. All right, so I hope everybody's out there making money, enjoying your families. Drop a comment below. And that's the overview. This isn't about calling tops or bottoms. It's about running a repeatable system. The earned capital strategy is built to work through volatility, not avoid it. Red weeks happen. That's the cost of staying fully invested. In the next video, I'll break down why I chose specific positions, go deeper into ULTY's role, and show how I track true gain over time, not just price. This is real money, real decisions, and real market conditions, no cherry picking. If you want to follow along as this portfolio grows, compounds, and gets stress tested in real time, make sure you subscribe, comment below, what do you think? Hit that like, and as always, none of this is financial advice. This is just what I am doing with my money inside of ULTY and now the earned capital strategy system. See you in the next video update. ULTY YOLO out.